Okay, all right. In fact, you know, the big mover that we saw yesterday was Tata Motors, right? At its India Business Analyst Day, it gave very positive commentary on the commercial vehicle industry. It said it's likely to grow 36 to 38% in FY22. So we analyzed demand trends with another commercial vehicle player, Eicher Motors. Vinod Aggarwal, the MD and CEO of Volvo Eicher Commercial Vehicles, joins us now to talk about that. Mr. Aggarwal, good morning. You know, that's precisely the first question. I mean, Tata Motors at its Analyst Day said they expect a 36 to 38% growth for the industry in FY22. Would you concur with that view? I mean, is it going to be as strong?
Sonia, absolutely. I think the reason is that this year first half was a washout. So therefore, next year the growth is considering that this year first half was absolutely very, very low. So based on that low base, you will expect good growth next year. And so it looks like it will be better than 1920. And somewhere it should be somewhere between 1819 and 1920. 1819 was the earlier peak. And with this situation, I think we are expecting that industry will be better, much better next year. Because first half will be normal. And second half, already last 3 months, last 4 months, in the trucks we are growing. Buses are still very, very down. Buses are down by 85%. In fact, still YTD. And last month also it was down more than 80%.
Sure.
So therefore, buses, that again will come back because the schools will open next year. And hopefully the bus market will come back, and the truck market are already growing. In fact, HD trucks last month has grown by 15%. 5 to 15 ton trucks have grown by 30% in January as compared to previous years. So therefore, I would say we are already at pre-COVID levels as far as the truck industry is concerned, and buses are down. So next year it will be much better based on the first half.
Okay. Mr. Aggarwal, good morning. You know, anything would be better than 1920, right? And that was, of course, the kind of a year. But you said it will be somewhere between 1819 and 1920. But do you see, I mean, the question I'm asking you is, you've seen many cycles. Do you see the market getting back to the peak and sustaining there for 2 or 3 years?
My expectation is that for CV industry, next 2-3 years will be very good because we have a lot of pent-up replacement demand, because replacements have not happened in 1920 and 2021. And now only they have started happening because sentiments are positive now. The CV industry runs on the economic sentiments. Since the economic sentiments are positive, people have started replacing their old trucks, and so that cycle will come. And as it is, after BS6 was introduced, there are much better trucks, much better productive trucks with the lower cost of overall ownership. Therefore, it makes a lot of sense to replace the older trucks. So we are expecting that replacements are going to be very strong. Therefore, I think maybe after 2 years or maybe within 2 years itself, we should be able to reach our earlier peak levels of 1819 or even cross that.
Okay. How are you grappling with the ECU shortage issues? I mean, are there any production constraints that you're facing because of the ECU shortage, and how is the industry dealing with it at the moment?
As of now, of course, this is a very big constraint, one of the major supply constraints. But we are trying to cope up. We are trying to manage the situation. But definitely it's a major constraint, and it is likely that this will continue even next 3-4 months, because we are not looking at easing up the situation. In fact, more and more suppliers are declaring the force majeure, and they're not able to get the parts, and so definitely it's a major concern.
Okay, Mr. Aggarwal, have we now reached a stage where diesel prices will begin to hurt demand? Has it already started to happen, or is this as of now just an irritant?
Fundamentally, you know, this entire the transport industry runs on the economic growth, and if there are goods and services which have to be moved, then people have to move those goods and services irrespective of what is the freight. Therefore, I think this will reflect in the increase in freights. So freights have to go up. There is no other way, because it's a huge increase as far as diesel is concerned. If you see last year, I think in March, the diesel rate in Delhi was around 62 rupees per litre. Currently, it is 81 rupees plus. So 19 rupees is huge increase. And if suppose a transporter consumes 2,000 litres of diesel per truck every month, So it means the cost have gone up by almost 40,000 rupees per month per truck. So that's the type of and that will add to the inflationary pressure. It will reflect in freights because there is no other way, because the goods have to be moved. If the economy is growing, there is demand for goods, they have to be moved, whatever is the freight. So the freight rates will go up.
Okay, you made a blanket statement earlier that you're seeing demand pick up across segments, tippers, tractor trailers, but can you give us some exact numbers? What has the growth been in haulage? What has the growth been in tippers, tractor trailers and the bus segment on an average, and where is the maximum potential now?
If you look at the tippers are doing the best. Tippers are almost at the earlier peak level. Tippers are now almost every month around demand of 5,500-6,000 tippers per month. So tippers, if the HT industry has grown by 15% last month, the tippers have grown by more than 20%. So it's led by tippers, and haulage also is coming back because there is more and more demand for movement of steel, cement, and all these other goods. And entire auto industry is doing well. For example, if the passenger car industry is doing well or two-wheelers are doing well, it means they also need to move all the parts to produce these two-wheelers and cars. And then, of course, you have to distribute these. You need more trucks to distribute cars and these two-wheelers to the dealerships. So therefore, I think it's overall, movement of goods and services which is becoming very, very positive.
Okay, all right. Well, we will leave it at that. Mr. Aggarwal, thank you so much for joining us and giving us an update. Things are definitely picking up. They're quite confident that there will be an over 30% growth in FY22, and of course it will be a much better year than FY19-20. But across the board, haulage, tippers, trucks, tractor trailers, all looking pretty good. Let's take a look at the past financials for Eicher Motors. First up, the revenue picture coming up for you on your screen. It has been steady state for the company. Of course, FY20 was challenging for everyone, but look at that rise there. Next is the EBITDA trend, and then we'll have the profit after tax. EBITDA as well, strong as she goes, and profit after tax performance too has been steady state for Eicher Motors.
Oh yes, it's done well. Well, let's welcome Prashant also on the show now for the next 1 hour. Prashant, good morning.
Hi,